I am going live here. I am going live. Hey, how's it going? This is Sergio Melendez. I am an IRS agent and Juris Doctorate. I got 18 years experience in the tax industry, fighting the IRS, preparing taxes. And one of them has been defending clients that are going through an IRS audit, taking them from A through Z, doing everything from the initial representation, the initial contact with the IRS auditor, to fighting the findings, going to the Office of Appeals, petitioning to tax court, and settling out through the Office of Appeals. So, why would somebody get involved with the audit? Many different reasons. Sometimes it's the luck of the draw. Sometimes it is the tax is done so incorrectly. Other times you've done some amended returns. The IRS says, we want to just take a look at this stuff. So the technical term the IRS calls it is an IRS examination. That's right. Examination is the technical term the IRS uses for an audit and what they want to audit. Who do they typically trigger, or who do they typically target for any type of audits? The self-employed people are like the number one target. People with Schedule Cs. If you're self-employed, unfortunately, you're one of the most number one targets. The second one that the IRS quickly goes after are single parents, people filing head of household with dependent children. That's unfortunate. And then the third are just general business owners and businesses, C Corp, S Corps, partnership LLCs, LLPs, so on and so forth. But how does somebody get chosen for an IRS audit? Every tax return is assigned what's known as a diff score. So the taxes are just held incorrectly. Like, for example, if you filed a tax return, you're self-employed and you're claiming a loss, that means that you can't even afford to pay your personal expenses because your business expenses are below zero. The IRS says, hey, how are you paying your personal stuff? Well, let's take a look at this stuff. Other times too, the taxes are just so incorrectly done. By incorrectly done, I'm meaning that like taking a look at the expenses are just unreasonable. So everything gets electronically filed, the computer system picks it up, and all of a sudden everybody's diff score, which is the audit risk, it's low. It's really, you have like higher chances of winning the lottery. But if you filed it wrong, you just raise up your diff score, like you're sticking out like a sore thumb. You're actually waving a huge red flag and saying, "Hey, look at me, IRS, look at me. Hey, I'm pushing the envelope here." And the IRS will come and they'll take a look, and the IRS will say, "Yeah, you know what? Your tax return is so incorrectly done based upon these red flags. We want to take a look at your books. We want to take a look at your income, your expenses. Let's go ahead, and not only 1 year, we're going to go ahead and full blown for the full 3 years, and that's a full blown audit." So a little bit of prevention tips is get the right tax advice. If you before on the average scale, if you're actually kind of evening out on your taxes, then all of a sudden you go into a place and you're getting a huge refund, you better ask some questions. Hey, did you do anything differently? I mean, take a look at it and see if the income makes sense. If there's any type of negative numbers that don't belong on there, that means the tax guy probably did something they shouldn't have, and it's up to you to ask the questions. You don't just say, "Oh, a big refund, I'm not going to question it," and go ahead and accept that. So if you're in business, either you're self-employed, you have a partnership, a 1065, an LLC, an LLP, S corp, C corp, you would have to maintain your books. Your books, by keeping great bookkeeping, you keep everything separate. Whatever's business in a business account, business credit cards, and then whatever's personal, keep that completely separate. Those are prevention tips in case you never know when an audit comes, because they come at a horrible time. They come at any given time, because that's the law. If you look up, the law is the government has a right to inspect your books at any time, anytime. And it's horrible. I mean, if you're about to, have a baby, you started up, you're expanding your business, or your business is not doing that well, the IRS, they don't care. They're going to come back and they're going to audit you. You better be prepared to show up. Which is why too, you always have the right to be represented, which is when I come in for different clients. So I come in as a power of attorney. So sometimes it affords somebody that's self-employed for them to keep doing what they're doing, and they hire the right person. That way I could hook a jab directly with the IRS. What else? File your taxes accurately the first time. If you have to file an extension because you don't have everything ready, then start getting everything ready and don't wait till the last minute to file a tax return that could be half-assed and incorrect or just not accurate. Keeping the business records too. If you're the type of person that maybe at the end of the month you intend to do well, you meant to reconcile your books, you just don't do that, it's time to at least bring aboard a bookkeeper or an accountant that maintains your books. That way all that is accurate and reconciled the best you can with your business bank accounts, your business credit cards, and all that kept separate. All that's prevention tips. Um, Now, what if it's the luck of the draw and you actually happen to get audited? You probably have to do a lot of emergency backpedaling, and that's no problem. A lot of the clients that we represent through audit, they just don't want to do the wrong thing. So I'm going to go over the what you absolutely cannot do, don't do with the IRS in the middle of an audit because you got selected. The first thing I think with audit 101 is do not file an amended tax return. That is the worst thing you could do, because now you're saying that you got chosen for an audit and all of a sudden you come back and say, hey, my taxes are incorrect. This is the way they should be done. The IRS is going to completely reject that amended return, that change, because the whole audit procedure is one long change. It is a legal procedure that leads all the way to the tax court, which is why you cannot do an amended tax return. That's wrong in Audit 101. Do not file an amended tax return. What you have to do now is you have to substantiate whatever was filed on the original return. And if there were errors, which in the most part there are errors, here comes to the second part. Do not admit to any errors. Don't say, hey, I screwed up. Here's a whole bunch of a different income that I didn't include on the original tax filings. No, the IRS is actually going to go through their own discovery. They're going to make sure that you provide to them certain bits and pieces of information. But one of the first things you don't do is do not file an amended tax return. The second thing is do not ever lie to any government official. Instead of this whole being one civil matter, you're going to throw this over to a criminal aspect if you ever lied to a federal agent. Don't you dare lie. What's better than doing that? I'm going to cover that in the dues, whatever you should do. So don't lie. The third thing is do not falsify any information. Falsifying, it's a double whammy. Same thing. It could turn criminal or worse. Not only does it turn a crime, but you get slammed with a fraud penalty. A fraud penalty, at the end of the day, there might be some change throughout an audit, and the fraud penalty is up to 75% of the additional tax of whatever they're assessing. So imagine they come back with a $100,000 tax bill, and because he falsified information, got slammed with a fraud penalty, it's an additional $75,000 on top of that. So it's $175,000 just off the bat, off the whammy. Don't falsify information. That's a big no-no. One of the big issues, don't become buddies with the auditor. Don't become friends. Don't become drinking buddies that they're not your buddy. As a matter of fact, these IRS agents, they have only one thing in mind, the government's best interest. And on top of that, they have their own job and occupation to look out for. They don't give a crap about you. They really don't give a crap if you had a good day, bad day. They don't care about your kids, about your family, about your work. They don't give a crap. They just care about the government's best interest. And second of all, their own job. So that's why there's no, hey, I'll slip you 20 bucks if you look the other way. None of that going on. They will not care. There was this really cool case where the guy getting audited by an auditor and they actually hooked up. It turned out to a big legal mess because he thought he was going to get hooked up. She just kind of, went with the flow, and she had to recuse herself from the whole case. At the end of the day, the guy literally got screwed by the IRS. So he did some hanky-panky with the auditor, and next thing you know, there was all kinds of changes. He tried to sue everybody and the mother, and it all failed. So don't become buddies with the IRS. They just don't give a crap about you. Now, so I cover a lot of what you don't do, a lot of prevention. So what do you have to do in the middle of an IRS when you do get chosen? Number one is actually be courteous with the auditor. Auditors are actually the nicest people that work in the IRS. It's a secret that they use. They try to pull information from you by being Mr. Nice Guy. They might ask you, hey, how's it going? Even though they don't care. After whatever you answer, they say, hey, by the way, did you include everything on your tax return? It's all right. You can tell me. It's almost like they get you to confess because they're Mr. Nice Guys. That's why you don't become buddy, but at the same time, you're courteous. Don't be rude. Don't be disrespectful. So that's the do. Second, be honest. If they ask you a question, you want to answer it honestly. And as a matter of fact, if you don't want to answer, you always have that right. The Miranda rights apply to where the police officers in a criminal case, they have to read you the warning. Anything you say can and will be used against you in a court of law. It's the same. It's a court of law. So this applies to you. It's your Fifth Amendment rights. All your federal rights apply in a government proceeding like an audit. So you have the right to remain silent. And sometimes that's the best position. That's the best position. Don't you ever just speak to the IRS auditor. You would want to remain quiet. At times, you just, the way you answer back is something courteous, like saying, hey, do you really need that information? Or sometimes you just tell them, you know what, I can only give you about 5 minutes worth of time, but could you put me in writing whatever it is that you do need? That way, you're really honest about that you don't want to talk to them, and they put it in writing, whatever they're requesting. And as a matter of fact, that's one of the things they do provide. It's an information document request, an IDR, and they list down everything that they're looking for. And normally, it's a copy of the original tax return. The other thing is there's going to be some timelines. You want to abide by all the timelines. If the IRS agents gives you only 30 days to respond back, respond back. And as a matter of fact, if you need more time because you didn't, because life happens, it's very reasonable in today's world. Are you kidding me? My son has not been in school since like the Christmas break because we keep getting COVID tests. We have to wait. We have to get a new test. There's no school. So it's like, hey, it's been 30 days and my own kid hasn't been going to school. So if I'm dealing with a 3-year-old at home, walking around being potty trained, making a mess, I'm going to tell the auditor, hey, man, you know what? Give me 30 days, but hey, this is COVID. This is the hardship that I've been going through. Can I get you what you need? So the auditor is supposed to take some reasonable steps. So time can be on your side, or the time cannot be on your side. But I'll show you a couple things how it could be on your side. Regarding audits, there's something called an ASED, the assessment statute date, which means by law, the IRS, the moment you file, which is why they always say file early, even if you owe, just file even if you're self-employed. The IRS only has 3 years to give you an audit. The moment it passes that 3 years, it's past statute. So that's one of the first things that I review when I get a new client. Is it past the assessment statute? If not, I tell the auditor, you know what? It's past statute, it's past law, you cannot audit. And they normally catch that. Now, what happens is those 3 years are approaching, the IRS may ask you to extend. And there's a couple benefits to extending when they do, if it's kind of close to that audit statute. So if it's kind of close to that audit statute, if you don't extend, the IRS may make some final changes. You're going to go owe a lot of money. And whenever you owe a lot of money, then you do not have appeal rights because you did not extend the statute date. So by you extending the statute date, you preserve some appeal rights. And that's one of the key aspects regarding audits, because I'll give you reasons why. Auditors, I don't know, I don't want to say anything bad about them, but screw it, I am going to say something bad about them. I don't know if they're blind, deaf, or they cannot read, or if they're illiterate. There are times you send them all the substantiation of what occurred in a tax return, and I don't know, they just kind of ignored it. They didn't bother looking at it. They didn't bother reading it, and they make all kinds of changes. And so when they make kind of changes, this is how an audit gets finalized, whether this is by correspondence, by mail, or this is an in-person audit. You could appeal that decision. So although they are powerful enough to make these initial changes, you could appeal it. So it goes over 2 different ways when something gets finalized. Option A is the first way, and it sucks. Because what they do is they finalize the audit, and they give you a 30-day. In 30 days, you have the right to disagree with them, meet with their manager, and say, I disagree with you because of A, B, C, D. You list all your pointers why you disagree with them. But normally the manager, if you have a meeting with them, they take a look and they say, well, I kind of agree with my auditor. We're going to go ahead and send out a notice of deficiency. So this notice of deficiency is official, and you basically have 90 days to petition the tax court why you disagree. So, and this is where we come in, and this is why we petition the tax court, because here we annotate every single conversation we've had with the auditor, every piece of evidence that we submitted to the auditor. And sometimes I ask the auditor, hey, I sent you a fax dated on January 18th at about 5 o'clock. Did you receive it? He might say, yeah. I say, on there, I listed all the deposits and it matched the tax return. Why is it that you're adding extra income? And sometimes the response is really stupid. Sometimes they just backpedal, say, well, that's just my opinion. So whatever they say, I jot that down. So when we petition the tax court, that's one of the reasons why we disagree. We disagree. A, we submitted evidence of income on blah, 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 blah. B, based upon whatever we submitted, the IRS auditor's own personal response was, based upon my opinion, I kind of glanced it over. So you list down all the disagreements with the tax court petition. And procedurally wise, when it comes to audit, basically it deals with 2 different aspects, and they kind of combine. First is just the procedure, like I mentioned. You get audited, you go through the audit, you disagree, you go through appeals. The other part is the technical aspects. What is gross taxable income? What are expenses that should be included or excluded? So the technical aspect kind of must match up with the procedural part, and we put that both together in an audit. So at the end of the day, we have a whole lot more successes whenever we do petition the tax court. But even right now, with a lot of COVID delays, the tax courts are backed up along with the Office of Appeals. But nevertheless, the moment you make that petition to tax court, when you get a 90-day notice of deficiency, is the moment you preserve your appeal rights and you're fully protected, which means that these changes or this assessment by the IRS is not finalized until the final determination comes about and it's authorized through the tax court. So that's one of the things that we do help out. But anyway, this is just the basics of an audit 101 with the IRS. I fight the IRS left and right, either by the phone, in writing, or you name it. I fight the best way possible on behalf of our clients as a power of attorney. You could put my 18 years of experience, my enrolled agent, to put to work for you. We offer free case review. Uh, you could visit Semper Tax Relief or sempertax.com. I'll also put the link in the comments if you want a free case review in case you're getting audited, or if you want a simple tax filings, you want to make sure that it's accurate. We do that through Orange Coast Tax. So I'll also post a tax filing link right below in the comments. Also, if you have any questions, shoot me a comment, shoot me a direct message. More than happy to help out. I got a great onboarding staff. My onboarding staff, when it comes to tax problems, whenever you have some kind of inquiry with some kind of tax problem, we go ahead and we thoroughly review it to make sure that you're the right type of client, the right type of fit for us. Normally, my onboarding team is composed of Mark and Patrick out of the Pasadena office for Semper Tax Relief. So we go through a whole thorough investigation. I'm sorry, a whole thorough case review to make sure you're the right fit as a client. At the same time, you want to evaluate to see who you mesh with, who has the right tools, who has the right experience to represent you in a fight with IRS, because this is something that you shouldn't take lightly. It's something that could be very serious, especially if you're self-employed. Anyway, I want to thank you for watching today. Have yourselves a great evening. Thanks. Goodbye.